This episode is sponsored by Sir Lancelot LLC, also known as SLA Capital, which, if you didn't know, is Dan and I's private lending company. So yes, we are sponsoring our own show, but what you going to do about it? It is our private lending company that offers hard money and DSCR loans to real estate investors of all types. So you can be a new investor, an experienced investor. You can be buying flips. You can be buying rentals, whatever. We can do everything. And not only that, but the rates that we offer are just as competitive, if not cheaper, than pretty much every other company out there. So whatever big company you've been working with, bring us their term sheets and I guarantee that we can probably beat it. We have the same connections they do. We just don't have all the overhead and middlemen. So if you want to come and check us out, go to slacapital.com/keys and I will know that you came from the show. And by seeing that you came from here, when you get to closing, you will save $500 on your first loan with us. So slacapital.com/keys, we would love to fund your next deal. There's been so many flippers that are refinancing now. And what's going to be interesting is there is eventually going to be an inflection point. We're already starting to see it a little bit. What's going on, guys? Welcome to the Collecting Keys Real Estate Investing Podcast. I am your host, Mike DeHaan, here with Dan Austin and Dylan Cook. And just to finish my point, okay, because talking about our lending company customer, it's similar to like borrowers, right? Like where, not borrowers, to sellers, where you eventually, like you will sometimes get these sellers where the deal is just so like whatever, but like you want to do the deal because making some money is better than making no money. But it probably makes more sense for you to just be like, no, I'm not buying your house. Go deal with something else.
Yeah. In the beginning, I probably spent way too much time on people that I should not be talking to.
Of course.
And now I'm just like, nah, I'm good. You can
Totally.
bother somebody else.
And now with our lending company, running the same thing all the time. And of course, just like with the wholesaling and flipping business, it's always the loans where the person has horrible credit, where the deal barely pencils, right? But they're adamant that they need to close on it. They probably aren't going to have enough money by the time you get to closing to actually meet the requirements. You're making like an eighth of a point on it because they've shopping you around. It's always the worst. Just like with a seller that's trying to, pin you up against everything.
That's the one that like buys a car like the day before, like closing on a house or something stupid.
Yeah, exactly. Right. So, I mean, there's that old mantra that, let's say like the 80-20 rule, right? Like you can apply that in pretty much any way. You can say like 80% of your profit comes from 20% of your deals. You can also say 80% of your problems come from 20% of your sellers or your borrowers, right? It's the same principle.
I guess I've never really met anybody that was extremely successful that sweated the small stuff.
Totally, dude. 100%.
Like the most interactions we have, it's not that they just are oblivious to the details. That's not what I'm saying. But like they don't do the whole step over dollars to pick up dimes.
Absolutely. So sorry, Dan's going to be hopping off and on the phone.
I just got to take this phone call. Hold on.
Today while he's trying to manage our 12 closings that we have between today and tomorrow. But Dan's totally right though. You don't really see successful people that sweat the small stuff, on things like that. Or like we've talked about over the years, if you've listened to this podcast or different things around the importance of like having some hustle with getting some of these deals together. And sometimes you just got to be willing to, eat it, right? You show up and move people yourself. Like you have to go and drive an hour and a half each way to get a contract signed in person because the only place that they're comfortable, signing a contract is eating lunch at some shitty diner down the street from their house, right? Like those are the things that separate the people that actually hustle their way into success in this business versus everybody else.
Yep.
I know I've done that forever. Eventually you get to a phase where you pay people to do that for you. When you're starting out, that's what happens. And it's the same thing if you're in your lending business or you're buying rental properties. Sometimes you are going to have a rate change 2 days before because they decided that the appraised rent was low and your DSCR isn't good enough anymore. But you have to decide, is a reduction in $60 a month in cash flow worth it for you to not buy that asset? If it really is, you probably shouldn't be buying it anyway, because that means that deal kind of sucks, honestly.
Yep. Well, and the other, like with the wholesaling stuff now, I'll do that interchangeably, but also like it kind of depends on how thick that deal is, right? Like if I know it's going to be like a 40, 50, I was like, yeah, I'll go out there. I'll take time out of my day. But if it's like, I don't know, $2,500, $5,000, I'm like, I'll get to it tomorrow.
Have you had one of those where you were expecting it to be like a $40,000-$50,000 deal, and then by the time you got through all the bullshit, it was actually like a $10,000 deal?
Of course.
That's the worst.
Yeah.
Yeah. Because you're like, oh, once we get through it, it's going to be so much better. And then things go, and then your buyers are interested, and the market shifts. And then like, well, I paid them $3,000 to move into a place. You know,
and now it's just to the point like I'm just too committed at this point.
I know.
Like, I got to see it through.
I know. So. Yeah. We had one that we did, and it was exactly that earlier this spring. And ultimately, we ended up selling it as just like a scratch deal. Like the assignment was $0. And it was just because we were like so committed to actually getting this deal done. We didn't want the sellers to be pissed off. You know, our buyer had been kind of like jerking us around, and then finally they like agreed to actually move forward with it. We spent so much time on this deal doing everything else, and we were just like, and then of course there was like issues like at closing, and then our buyer's like, you know, they left stuff in the property, when we're like, figure it out with them. I don't care.
Yeah.
Like
yeah. I had one where the guy like they bought it and it was supposed to be vacant at close, but we didn't do like a final walkthrough prior to, and we do the closing, and next thing you know, he's still in the house. Yeah, and it was like, nice. Oh shit. Nice. And my buyer's like, I want my money back. It's not vacant. And we ended up working it out, but like, it's just like stuff like that just happens. Like,
yeah. What can you do? It's part of the business, but
part of the business.
Well, anyways, another news. If you guys missed our episode last Tuesday, with our hot takes, that was our most successful episode we've had in a while. Actually got some good engagement on like YouTube and stuff like that too. So go check it out. People liked it. Basically, it's three of us sharing two of our personal hot takes on real estate and the economy. And it was a fun episode to record, and people seemed to really like it. So go check that one out. Everybody listen to your shows. And then also too, we started to revamp our scale community, which has been an interesting shift as well. So if you want to come and like hang out with us, talk business and everything else, go to collectingkeys.com, and you can check out our, like right on the homepage, you can join the Scale Slack channel, come hang out with us, and hang out with the other members that have been with us for a little while as well. It's completely free now. So if you want to come talk business, it's a good place to hang out with that. But those are kind of the updates of our business now, though. I know you said that stuff has slowed down quite a bit in your market, Dylan. I know we've been seeing that everywhere. Like even a lot of our borrowers for Mr. Lens a lot, there's been so many flippers that are refinancing now.
Yep.
And what's going to be interesting is there is eventually going to be an inflection point. We're already starting to see it a little bit, where people they're not going to be able to refinance without having to bring more money to the table.
Yep.
And they have equity, right? But we've already seen a couple of these come in where it's like the DSCR is just so poor with your interest rates. The valuations are coming in lower because all of the appraisals are now looking at the stuff that is sold at lower prices. And so for them to refinance out, even though they have 20% equity, they're going to need to bring 5% more down. And whether they choose to do that or they can even afford to do that has become the question. And a lot of that's just because the market slowed down. So it'll be interesting to see how that affects things bigger picture.
I'm surprised with your market of how higher your median sales prices are. Like here, we can gotta get away with that a little bit more. I feel like, at least what I buy, where I could turn it into a rental. But if you're 450,000 and it's renting for what? I mean, you tell me 2,500 a month. Mm-hmm. I mean, does it even have a positive DSCR?
Barely. So like we literally have one of these right now where, because what'll happen too, and everyone listening to this that thinks that they're like a savvy investor that's doing rent by the room and different shit, just know every lender's like onto that now. And so if you're trying to like put together a lease that's actually for a sober living house, but it's in like a person's name, right? So it's fine because it's a real lease, but it's for 2x over market value. Like they're onto that shit. Like they're not going to let you do it anymore, and they're starting to call it out. And so in this particular case, I don't know what the guy's situation is because he actually has a property management company, but the fund that's actually providing the money for the DSCR, they took his lease rate and they compared it to the appraised rental market amount, market rent. And they basically said, we're only doing the market rent. So they will do the lesser of the lease amount versus the appraised market rent, right? And so when we put it together, we go off of what his rent was. He put in his application, everything else. It's like a 1.15 DSCR. Now, with the loan amount he wanted, it's negative. And so we have to reduce the loan amount.
Yep.
Right. And so he's going to have to be bringing money to the table, I think, at this one. And it's going to be a worse rate because now the DSCR is like 1.0 flat.
Yeah. Yeah.
You
Get
know,
hit with both fronts.
Totally. And then also too, to your point, Dylan, not only DSCR worse, but in these situations where the property's worth $400K and you have to bring an extra 5% to reduce the loan to value, that's like a lot more money than when it's $180,000.
Yeah. I mean, that's 20 grand right there.
Totally.
I mean, yeah. Is, on the DSCR side, can you do cross collateralization? So like if I own my house free and clear or another investment property free and clear, throw that onto that mortgage. No, you can't do that.
You can only do that with short-term stuff sometimes. And typically they will only allow you to do it for short-term stuff for like additional renovation costs. If you have like a huge reno. So let's say you're buying a house that's like needs like $300,000 in reno and the house is, is only going to be worth like say 500, right? So it's a huge percentage of it. They will require you to get a cross collateral to appropriately collateralize that.
That makes sense.
But people trying to do it for like down payments and other stuff. It's not a thing. So
yeah, that could get messy quick because then you're like, you could try to repledge the same collateral multiple times. And we all know how that works out.
Yeah. But we're starting to run into that, because like the challenge is too, is a lot of these people that are not able to sell and having to refinance and bring money to the table. They're also newbies and they probably don't have the money that they need to bring to buy down to basically do their refinance. What do? Right?
Yeah.
You sell the house, go bankrupt, quit.
Yeah. Well, the thing is like they can't even sell the house. That's kind of like the whole point. I guess eventually if you drop the price enough, you can sell it.
You got to move into it so you can refi with a 95% lever loan.
Not with a DSCR loan. I mean, I guess you could get
I'm saying like you'd have to abandon that entirely and just go move into it.
I think people just need to be less scared to sell a property at break even or slightly come out of pocket a few $1,000 because you're going to come out of pocket a few $1,000 a year if you're renting that thing, likely in this market.
And just the headspace. I'm selling one right now that I am a distressed seller. I'm telling you right now, like, let's get me out of this fucking house. And I'm losing money on it, but I don't care. Like, just get it out of here. So
well, one of the funny things that happens too, honestly, it's funny. It's actually pretty annoying and terrible. Is what you will see happening, and I know people that's happened to recently, is they will have these properties that they desperately are trying to hold on to, get out of, pay off hard money loan. They will sell a different property that they feel like they've already kind of squeezed the juice out of. They refinanced it a few years ago, whatever. Rates have started to go down. They don't like it anymore. So they'll sell that property to basically pay off the new one or get into the new one. Here's the thing people don't realize, okay? If you buy a house, if you say you bought a house in 2020 when rates were low, it's now doubled in value. You did a refinance, 75% of that. Okay, so you pull out most of your money. Now the values have gone down 10%. You still sell it. You still have a huge capital gain that you're going to have to pay from what you bought the property for versus what you just sold it for. And it's highly possible that all that equity that you think is there is gone because you already took those gains when you did that refinance. And so what happens is you're taking this equity that you think is yours to go and buy another property. So you just dump it right away into that house. And then you have a huge tax bill that's going to come up next year with your 20 to 25% long-term capital gains. And where's that money going to come from? You're completely screwed. Like that's
so you gotta bonus depreciate and cost seg the one that you just bought to offset that. Like totally. But then you're just in a circle. Like you have to keep on that hamster wheel for forever.
Right? And I would say that's a much worse hamster wheel than just like having a freaking W-2 job. Right. Like the more and more I've done this, like been in this industry, the more I've realized that it is a stupid industry to be in, like basically owning rental properties, if you don't have either a very high and sporadic or a consistent W-2 income, or like in the W-2, just like income, right? Of actual active cash coming in, because the long-term scenario always, whether it's your long-term capital gains, whether it's the market taking a hit and you having to buy yourself out of something, whether it's renovations, whether it's vacancies, right? Whatever it is, it was always losing money.
So here's a good use case for it to your point. We have a mutual friend, I think all three of us probably, with a guy in GoAbundance that is a developer out in Montana. And I was talking to him yesterday about a project he's doing. So he has a high income, 7 figures a year with his construction business, does well. And then having some exits on some things, he's looking at, a $400,000 or $500,000 tax bill Like that sucks. And he's doing the mental math that Mike just jumped through. He's like, do I chase bad deals? I've lost my ass in syndications that said they would give me tax benefits. All of those are options, oftentimes bad options. But then he was talking about this other project he's doing, a new build community of duplexes. By the time it's done, the asset value will be about $22 million on the books, which is incredibly awesome. And so he's like, I think I'm just going to do straight line depreciation on that instead of doing the whole like accelerated depreciation. Because if you think about it, what is it, $22 million in an asset? That's that divided that by 27 and a half. What is that? I don't even know what the math. $750 a year in tax write-off, $750,000 a year. So he can essentially write off the bulk of his income from his construction business with that single asset. And he owns other assets with depreciation. But the conversation ultimately always tends to, when you're done with that, you needed to sell it and 1031 it, or you got to eat the taxes. And the only argument that I would have for doing the depreciation is that you want to keep as much of your active wealth building in your pocket so you can continue to scale that wealth quickly in a period of time when you want to be active. So if you're making $1 million a year and you have to give 300 away or 400 away to the tax man, when you could invest that into new stuff right now, and your use cases for the next 10 years, I'm building wealth. And by the end of it, those taxes will then be worth more than the 20% or whatever you're going to pay, 25% you're going to pay on tax. Like that's the only use case. A lot of these guys, they're like 60 years old and they're investing in real estate. It's like, when are you going to like benefit from this? Are you still in your active wealth building phase, or are you in your retirement phase? Like, okay, at some point in time, you do pay taxes.
Yeah, when you get to that age too, it's a whole other thing, because sure, they can like die and leave it to their kids, but are they just going to hold on? Like they could live 30 more years.
Yeah.
Right. And they're not making money anymore. Like, what are you doing?
Yeah. And then the point I was going to bring up the last point on a new construction project is that actually makes sense, because in the sense of, you're not going to have like shitty properties that are always breaking. Yeah, you're going to have, losses and stuff, actual losses that happen. It's inevitable when you're building a $22 million community, but like you don't have the same issues that you would have with a 100-year-old building that you just renovated and the hot water tank goes out and wipes out cash flow and all that sort of stuff. And so that depreciation actually is truly a huge tax benefit. You're not, it's just paper losses without any other bullshit. Well, and then you can sell it 4 or 5 years later without getting raped by the government.
Today's dollars are worth more than future dollars too. And that's kind of the whole pitch when it comes to the tax piece of it. But even when you, like the guy that's 22 million and he's going to, take straight line depreciation, and who knows what his building costs are. He could take out a 50 to 60% loan and have plenty of equity in that, right? Or he could try to max leverage and refinance. But like even in my own portfolio right now, because I'm under contract on a somewhat bigger deal, and I'm like, okay, I could have the funds, or I could sell something and just come basically zero money, quote unquote, out of pocket. But a lot of my stuff is still in a 5-year prepayment penalty. So I really like my portfolio architecture, portfolio thing is like, it's still kind of, real estate's already illiquid, but this is even more illiquid because I don't want to pay the penalties.
Yeah. Well, and I will say, you said that you can take out a 50 or 60% loan against that property. It's highly possible you cannot. Because we have another mutual connection that literally has already done what Dan's talked about. And we have tried everything, and we cannot get a loan for him because it's too big of an asset, right? For like these DSCR lenders. So it's a bunch of townhomes. They won't do it as a portfolio because the exposure is too big, right? And so he has to go to a commercial loan. Problem with the commercial loans is cap rates suck, right? They want it to be fully leased, which can take a very long time, especially if you're in a market that the rental market has gone down. Double so if you built a luxury sort of thing that's like a higher price point, which no one's moving into right now. Okay. And they basically have death by 1,000 cuts because they did what most people do, where they have a fund that they've set up that's paying a pref. And then they also have a construction loan to build the massive community like they would, that's at like 11%. Right. So they're paying an insane amount of money. Like I think their total debt service on it's only like 50% of the value, quote unquote value, right? So they only want like a 50 or 60% loan, exactly like you said, but no one will touch it because the exposure is too big and because it's not fully occupied, and they can't get it leased up because no one is renting like apartments that are that like townhomes that are that expensive right now.
Yeah. That's an interesting point of view, though, too. Or I guess a point that you make maybe unintentionally is like how much underwriting goes into these loans and how, I mean, we've talked to several of these big funds that are all bringing 50, 60, $100 billion to the table to put into real estate. And their underwriting criteria is freaking crazy.
Yeah.
This is not the 3.5% down FHA loans that, hey, as long as your credit card bill is low enough, we'll still sell you or loan you money on a house. This is like they really favor high credit scores. They really favor low LTVs. So it's just like it's interesting. To me, it means it screams less of a wave of like bad debt coming into the field, but there is a lot of money coming into real estate right now on the debt side.
Yeah, there's a ton, but they're just as picky because just in different ways than Fannie Freddie loans.
Yeah,
like there's
better way, I think, way better. Right.
Sometimes, but then there's really dumb stuff that happens. Like we have this one that you were just on the phone for before, and we ran into DSCR issues because they signed a 6-month lease instead of a year-long lease. Right. So public service for you guys, if you want to get DSCR loans, sign fucking year-long leases because even though you can have a 6-month lease and 6 months from now you can double it or like make it better, you can extend it, whatever. They just look at the fact that it's 6 months, which is a short-term lease, which they value differently than a 12-month lease. Yeah.
Because hold on,
it's so dumb because they're so short-sighted on their 30-year debt that they're generating. It doesn't make any sense, but it's what they do.
Our buddy Chance called me. He was like pissed because I had an 8-month lease, and I was being smart because it was like a September to April because I was like, April and May are the better times to rent these places. Yeah. Yes. So I did this on purpose, and now it's biting me in the ass.
Yeah. It is, and that's going to cost you like $10,000 to $15,000 that you can't pull out because your DSCR is going to be lower, and stuff
I
like that.
already did it, but whatever.
Yeah. Well, stuff like that makes no sense, but like that is the trade-off now.
What if you put a 1 in front of that 8?
18
month.
Well, it might be like, that seems atypical for a lease. I don't know. That seems a little bit too long.
Scammer. Okay.
Yeah, right. Yeah. Dude, even like little stuff. Like we just had to adjust another one because I thought I was being savvy putting together the loan. And the borrower was also a sophisticated investor. So we put together an interest-only loan at a higher rate to try and like flex the DSCR so that he could get a lower rate, right? Here's the problem. I didn't know this. I learned this like 3 days ago. When they go and they underwrite it, why they even offer interest-only loans, I have no idea. Because what they do is they look at what it will, what the monthly payment will be when it locks in 5 years, and that's how they fucking determine the DSCR.
Interesting.
So I'm like, what's the point of it?
Yeah, what is?
I don't
doesn't change it at all. Yeah.
It doesn't. If anything, it makes it worse.
Yeah,
like honestly. So. It's just an important thing to understand when you're trying to plan to get long-term debt on stuff because you can, like you said, Dylan, you can completely shoot yourself in the foot without even meaning to because you think you're being crafty.
Yeah, and that's what I did.
Yeah.
But I mean, how many messages have you got the past week, Mike, from people like, hey, my rate should be lower because that's the headlines I'm seeing all across my social media right now.
Totally. And so that's another thing people don't realize too is that when it comes to investor grade debt, it is not tied at all to the federal interest rate, the mortgage rates that you see thrown around in the headlines and everything else. So yeah, Dylan's thing, that's a good transition. Bringing that up today because as of the time of this recording, there was this whole headline, all these headlines going around saying it's the lowest interest rate it's been in several years, right? So we had several borrowers who are like, hey, can I get a reduced rate on the DSCRs or the loans that we're working on? And the answer is no, because we actually got a notice this morning that all of our rates are up 0.1% than they were yesterday, right? And one of the most challenging pieces just with debt in general is it's very volatile and it's hard to predict because I think at the end of the day, nobody, not even the lenders you're working with, fully know which direction things are going to go. And who fully dictates it are the big money, the big funds that are buying the tranches at the end of the whole rainbow, right? Yeah. And then along the way, from your loan officer, whatever company they work for, to the aggregator that they sell to the hedge fund that they sell to, right? Everyone's getting a cut along the way, and basically their spreads will fluctuate as well. So not only do you have like the big one setting the prices, but you also have all these companies in the middle that are basically flexing their margins And so that's why it's always really hard to get like any straight answers when it comes to rates, is because honestly, nobody knows.
Well, so the headlines are probably right if you're a owner-occupied 30-year person, right? Like those are probably lower than they've seen. But the DSCR side, maybe even the commercial side a little bit, is what you're saying. Like, nah, man, like we're just waiting for our superiors to tell us what our rates are going to do.
Well, commercial's even more different, right? Because a lot of commercial loans will be based off of what your local bank or credit union or whatever, because they will carry those on their books.
Right.
Right. That's why they will be like a 5-year adjustment with a 10-year balloon, is because they want to force you to give them that money back. Yep. And so that's like a whole different product entirely. But yeah, like when it comes to the investment stuff, it's not tied to anything that the feds are doing. And there's always been the sort of thought that it was based off of the 5-year for investment grade loans. But the problem is that's now varied a lot as well, because currently with the volatility in the bonds, a lot of the bigger hedge funds, they're selling stuff directly off the bond market, right, to like other banks. Like we currently have one fund that we're working with. I had to just like sign all the agreements and stuff yesterday. Their primary source of liquidity is a bank out of Austria that is buying all their stuff directly, right? It's not anything related to bonds or REITs or anything in the United States anymore. They're just they have a yield that works for an overseas entity, and they're buying American debt. Right. And so I don't know what that means over the long term. It's hard to say. What is interesting though, on the owner occupied side, is now what are we, like a month into the shutdown? It's starting to creep in now. I've been seeing this around on Reddit where people are starting to face loan and or housing issues with the shutdown as well. And so there's been a big sort of set of conversations this week I've seen on Reddit, specifically around VA and FHA loans. I haven't participated in these myself, so I don't know the details of it, but I guess there's been starting to be delays, and then being like, we can't actually close on the house until the government shutdown's over, because the money has to come from somewhere. And I guess it's coming from somewhere in the federal government. And so that'll be another thing, that if now we start getting a stack up of all these houses all these sales that are unable to sell, right? Where you're going to have sellers that are like, well, I'm going to go back on market to find somebody else. You're going to have buyers that are exiting the pool, or can't qualify when interest rates go up again in 3 weeks. Like this was like their window and they miss it just because they're literally unable to close a transaction. What's that going to do?
Yeah.
So that's
It'll be
a huge
interesting how
percentage
the
of deals right now.
October and November numbers compare both month over month and year over year. But I've heard similar rumblings in like, if you are in a floodplain, I guess FEMA is the deciding factor. So if you need flood insurance, like they can't get approval because of shutdown.
You know, the other bummer, Dylan, you're not going to be able to get any of your cool data because the government's not going to, they're stopped collecting it after this last report.
I don't really trust government data in the first place. So,
right? Dude, what data can you trust? I feel like it's all bullshit, especially with chat GPT and AI now. You can just make shit up. Like the episode we did 2 weeks ago where we had like that map that we talked about, where I had it like map out where like the hottest real estate markets were, and it just like made trash.
Mike, you know what's funny about that is like the day after I was on X and someone had made like something go viral. It's like, hey, Chat GPT, where did you get these numbers from? And its response was, oh, I couldn't actually open the CSV file. I just I was like, wait, what?
Oh my God.
So it just hits the nail on the head.
I have no idea. There was one I was trying to do something with recently. I wanted to read a PDF, and it said, and it like gave me a bunch of answers, and I was like, I'm pretty sure that's not right. And its response was, well, that's a locked PDF, so I can't read it.
Like
I'm like, then just say
first
that.
Time.
I know. God damn it, dude.
I mean, I don't know. It'll get better, right? You know, that's what the whole thing is. I don't. Well, and with the government shutdown piece, I think someone will bend the knee soon. That's just my thing. In the next like week or two, we'll see.
Why? Like, will they? I don't think so. Like, I fully believe that they are dragging it out indefinitely because there's that rep from Arizona that's going to come in and is going to force them to release the Epstein stuff right away. She's like the deciding vote. And I think they're going to wait until these couple elections are done here in November that they're hoping will flip a couple of the seats. And then if they do that, they will open up. Then she can come in and they will lose the vote to release the Epstein files.
Hey, if they release, I'm all for that. I don't care. I want the Epstein files to be released, so I'm all for that.
Everyone does,
yeah.
But except for them, because like it must be some really wild shit in there because they are taking things so far.
I mean, they did off him.
Yeah, well, I mean, but like big picture, they killed the culprit versus they're causing all these issues for tens of millions of Americans with SNAP and housing and everything else. He's just one dude. Nobody cares about that guy, like in the history of the world, right? There's so much other fallout that is happening because of this whole situation. So I don't know. I do really think that is a larger motivator than we realize. Like, honestly.
Time will tell. Let's put a bet on it, Mike. I'll give him 10 days. 10, well, it has to be 10 and a half, I guess.
10 days.
Are you going to take the over or under?
I'm saying over for government shutdown, over 10 days. I think we'll get to Thanksgiving.
I think so too. Because I think it's, I think what's more important is whose fault it is. That's a better conversation.
Well, that's what we were just talking about, right? And I said that I do think that the driver is because there's that rep from Arizona that's waiting to get pledged in, and then she will be able to push the vote to release the Epstein files. They don't want to do that.
They're not going to release Epstein files, dude. That is such a stupid argument. You know that.
Yes, they are. No, they aren't. Yes, they are.
Bro, they released a videotape that never existed, and it's missing 1 minute. Like, the minute he gets hung. Like, no, dude, it's all lies. It's all lies. Dude, you got to... Oh, dude, there's some... Man, I'm up to date on my...
Dan's going to get heated.
I'm just like, man, you're a smart guy. Don't believe in the Epstein shit. It's all bullshit.
I absolutely believe in it because I think it is the ultimate selfish thing for them to worry about.
Here's my point then why? Because the Democrats want Trump to release it, and why didn't they release it in the 4 years that they were in office?
Such a great question, right?
Right.
Totally.
So then it's just a thing they're dangling, dude. It doesn't exist.
Of course it is.
Saying it happened, but it didn't exist.
Totally. And so my conspiracy with that is that the Democrats were adamant that they were going to win in 2024. And they didn't want to release it because of that. Because they're just as bad, dude. The Clintons, like, everyone all knows this.
Yeah.
But now they are so just like, fuck, we're fucked because the way that their whole party is and the Trump move and everything else, that they are willing to just light those people on fire. Like the Democrats that are being incriminated because it is their last option.
It's their broken arrow last stand.
It's their nuclear briefcase, dude. Like, it's what they have to do.
I really hope it happens. I'm on your side here, but I just think it's fucking bullshit. It's a farce. It's not gonna happen.
No,
ever.
I think it is. I think that is the.
And if it does get released, it's going to be a massive disappointment.
Of course it is, because it's going to be like all like
have no information in it.
It's going to be all like colored out with like red crayon, dude.
No, they don't even do that anymore. They just like delete shit and be like, the system glitched, guys.
Yeah.
Oh man, it was in. We found it in Hillary Clinton's email
laptop.
Yeah. Or let's bring it back. Sent to here. It says Barack Obama sent it to her.
So bad. It'll be like Barack Obama because they're not smart enough to actually.
Yeah, right. Yeah. It'll spell like Barack with a CK at the end.
Like whitehouse.gov or something stupid on there. Well, now that we're on the political tangent, I'm just gonna download that autopilot and Nancy Pelosi's tracker and put 10 grand in it and just like retire.
Yeah, dude,
absolutely.
Dude.
Yeah, you should. But God,
isn't that another thing with the politicians where they're all like, I can't remember which people. I know AOC was one of the leaders of it, trying to get the whole no trading single stocks. How interesting it is like that was like a thing, and they're like, yeah, we're done, we got it, and then it just never goes into effect.
Mm-hmm. I know. That's like
everything. It's a bipartisan agreement, and it just never happens.
Dude, this is every level of government, though. This isn't even like at the federal level. So even like at our local city level, this is a whole thing right now here locally where. So we have a pretty big homeless problem in Spokane. Okay. If you go and look up Spokane, that's every minute. It's like, it's so bad that people like come up here and they're like, that's the first thing they notice. You
don't see a Portland bad. The difference is we have no redeeming qualities like Portland.
Correct. We don't even have like, a whole herd of like local bakeries and coffee shops like Portland does. I mean, we do, it's just different. But anyways, several years ago, we voted to basically make public camping illegal.
Oh, yeah.
Which was supposed to crack down on just like the downtown being full of homeless people. They like passed majorly. 78% voted yes to ban it. It got to the city and they just went, nah, we're going to overwrite you. Yeah. I know that the entire city voted for this. We're just going to say no. And they just never enacted it.
Homeless industrial complex, dude.
Crazy. So like every election's a farce. Every political system.
There's the biggest developer in Cincinnati, or say at least the top 3, is going to like litigation with the local municipality because they even like the municipality basically said, yep, you did everything right. They got the environmental studies. You spent all this money. Everything you're trying to do is within your legal bounds, but we don't want you to do it. So no. Yeah. And it's just like, you can't do it. So now they're, going to legal troubles against it. And I just don't get it.
Yeah. The thing that it always comes down to, and it goes back to kind of we talked about last week with like my hot take that I think that you should be forced to sell property if you let them be distressed. Mm-hmm. I don't know why. I don't know if it's like as a U.S. culture or if it's just like everything else. And this goes through everything from the current elected Republicans, right, that are completely focused on themselves at the expense of everybody else, the local politics that are willing to let the homeless people just fucking destroy the whole city at the expense of every normal person, the selfish landlord that like has their completely disheveled property that is completely at the expense of everyone else that has lower property values being nearby it, that has to live with like safety issues being near this property because people go in there and do janky stuff, that has like an eyesore they have to look at. Why as a culture do we have so many things that just like allow one or two or like a small population of people do stuff at the expense of everybody else, right? It doesn't make any sense. Like, and it's crazy.
Have you been to Singapore?
I haven't, no.
Okay. So I only bring that up because I've heard of that someone who's like, well, they have great things, but they have like capitalism, but their government's also like very strict. Whereas like if you litter, you're going to jail for like a year.
It's always really tricky to compare the United States to any Asian country because in Asian countries, they're very not homogenous, right? They're all the same. Yeah. Like so people always want to compare the United States because like all the people they're not like a melting pot like around the United States. Mm-hmm. If you go to Japan, all the people that live there are Japanese, right? They were growing up with very similar ideals, even if they're like left leaning, right leaning, or whatever. There's like a certain like cultural way that they raise everybody. Whereas here we don't have that. I mean, not even like going across states, even in like the same neighborhood, dude. Like, how you're going to raise your kids is going to be completely different from the people down the street from you are going to raise their kids because they have different religion, a different upbringing, a different background, different financial situation, everything. And a lot of Asian countries, they don't have that, right? Or like even if you go somewhere like Thailand, it's a good example because Thailand has a very visible difference between the like low income people that are living in basically holes in the wall that are a 10-minute walk from like modern Bangkok, which is like a freaking American city, right? And there's people in there working. Yeah, it's nicer, honestly. There's people in there working in like a Starbucks that are local Thai people at their virtual jobs, right? Like that is like those things are 200 yards from each other, right? But they still have similar ideals. They still were brought up similarly, right? And they just don't have quite the same, like we're going to screw over everybody in the world for like one person. For one person. Maybe they do, but I don't know. It just doesn't seem that way quite as much.
I've got my whole argument about ADA sidewalks. Oof, don't get me going.
ADA sidewalk.
I have a whole thing. Trust me. It's harming the masses for people that don't use ADA sidewalks.
I mean, there's a lot of like disability stuff, old person stuff. I don't know. It's just so silly. Yeah. And I don't know what the outcome is.
Are you guys still seeing an increase in your loan volumes? And do you attribute that to you just trying to grow your business, or is that real estate related at all? Like there's more people looking for loans, or you're just growing your business so that you're getting more business?
I would say a combination of both, but I would definitely say it's us growing our business mostly. Like I would say and I'm not bragging, but just talking to the people that we've interacted with that have been in the industry a long time, when we tell them the volume we're doing, they're like, holy crap, like that's amazing for how, like new-ish we are to it. We're not new to it, but like we planted our flag in the ground and said, this is what we're doing. Like,
be like a wholesaler within 6 months is doing 10 deals a month. Like, as an analogy.
Exactly.
Yeah. Okay.
Yeah. That's a good analogy actually. And a huge part of that is because we are a anomaly in the finance space, mainly in the way that we don't come from a finance background, right? We come from a real estate background, and not only do we come from a real estate background, we come from a very high transaction rate, heavy marketing and sales background. And so we can bring those same principles and just like start right away. Like there's even like little stuff. So every single industry has a CRM that is like made for that industry, except for lending businesses. You know why? Because none of them have a fucking sales pipeline. at all.
Interesting. Yeah.
So the fact that we like built something out and you can go and there's like efficiency to it and everything else, that's like unheard of. Like a lot of these people, like a lot of these companies, their whole model is it's like a real estate brokerage. They just go and find LOs that have a book of business and they say, hey, we can offer your team, your clients better rates. You should come work for us. Right.
Or rely on the LO's book of business.
Correct. LO's book of business. They just recruit those people, or they go and they recruit like the young bucks who want to get into sales. They teach them how to sell loans and they just get them out going to like meetups and stuff. Mm-hmm. And if you can do a combination of those things, that's where you make real money. And you can do it with some level of organization and sophistication. So, but there definitely is a lot of people still looking for loans right now. And then there are a huge number of people as well that have been flippers that are trying to get into DSCRs because they can't sell their properties.
Yeah.
Like that is
so the market kind of turning down has been good for you guys.
Totally. Yeah. And then if the market goes up again, it will be even better.
Sure.
You know?
Yeah, because you're doing both the short term and the DSCR stuff. So
correct.
You can fund both ways. Yeah.
So I mean, I don't know, man. It'll be interesting to see what happens with a lot of that stuff, because I think there's just more and more things that are kind of getting like tighter and tighter. So we'll find out. Anyways, anything else you want to wrap up?
No, I just think with the Fed meeting this was on yesterday or 2 days ago. A lot of stuff went down. Bitcoin equities and stuff.
Why negative, Dylan? Like what's the long term?
Well, they went down 25 basis points, but then they pretty much said, we know the lower economic citizen is hurting. And they gave more uncertainty to their cutting cycle going forward. And so, but I personally, and they're stopping QT this week. Jerome has said we might need to be more accommodating. I think you give it a couple of months and they're going to be printing money again. They're not going to call it QE. They're going to call it something else. They'll have a new acronym for it, but there'll be a pro liquidity environment in the next 6 months. And I think honestly that will help asset prices and real estate. So
yeah, totally.
Should I buy Bitcoin?
I mean, I buy some every day. I'll put it that way.
I do too, but I mean, I don't have as much as you. So I'm like, do I need to put some money in there?
My answer is yes.
At 120.
My answer is yes.
Okay.
If you ask me if 6 months is going to be higher or lower, my answer is higher. So,
okay.
Yeah.
Always.
The question is how much is it actually worth it? Because I sold all mine when it did that first push up to like 120, and I just took my at that point it was like 15% gains or whatever. And I just I'm gonna put that in other stuff because I can control it more.
Well, it's funny. It's like when I first started this business, I sold 3 and they're $10,000 a piece. And so that's $30,000 that I sold to help fund this business. Today, that's what, $330,000?
Yeah, totally.
But I've made way more than that.
I know.
Over in the duration of time, like just from my business. So,
well, I think pretty much every sort of investment like that is so overly inflated. And to round this out, I saw this post this morning that was talking about NVIDIA's $5 trillion market cap. Because it just hit a $5 trillion market cap the other day.
Yep.
Okay. And this is everything that it is worth more than. And I'll just read through these and then we'll finish it up. So NVIDIA, $5 trillion market cap, which makes no real sense. Okay. It is now worth more than 2 Canadas, 166 Icelands, 1.5 Germanys, all U.S. regional banks combined, the world's billionaires 3 times over, the entire NFL 35 times, every pizza sold in history, every item on Amazon put together, NASA plus SpaceX plus Boeing, Toyota plus Sony plus Nintendo, every oil company on Earth, all of global gold reserves combined, the entire crypto market, and then all 54 African countries combined.
Yep.
The entire continent of Africa.
Yeah, is now worth
incredible.
less than NVIDIA.
Yeah.
So,
and they haven't even started selling to China. And I think there's a like a bill that they're trying to get passed that'll let them sell to China.
Meaning, with that
right now they can't.
If that happens, they're going to be screwed because then China's going to be like, "Cool, we'll just make the same thing but cheaper."
Well, yeah, that's the argument that lets China win the AI race, and like that's the only thing keeping this is argument. The only thing keeping the U.S. ahead of China in any little bit.
Totally, dude. Well, if you look at like the entire market, it's so heavily propped up by AI right now.
Although Singapore is selling China black market NVIDIA chips, so they kind of already have them.
Oh yeah, I'm sure they do. But anyways, what'll happen? We'll find out. Tune in next week to Collecting Keys, where we talk about what the world looks like in November.
Right.
So,
okay. Goodbye.
All right, guys. Well, you have a good one. We'll talk to you guys next time.
See y'all.
See ya.